In this video, I will discuss the Q4 FY25 result and Concall of Ugro Capital. So, starting with the company overview, it is a NBFC working in the MSME lending. So, starting with the AUM mix, it have 26% of AUM from business loans. It is some portion of it is secured and some portion of this part of the AUM is unsecured. I will discuss it about later. Then 22% from emerging market loan against property and 21% from secured business loan and 13% machinery loan. So if I talk about the unsecured and secured part of the AUM, 70% of AUM is secured part and rest of 30% AUM is unsecured. Out of that 30, 41% is guaranteed under central guarantee scheme. So that is kind of unsecured, but if the defaulter default the loan, if the borrower default the loan, then they will get the money back in lag of 1.5 years kind of thing. So if we see, ultimately the 78% or not 78%, but I think it is the number of 80% of AUM is secured and rest 20% is unsecured. So that is the AUM mix and unsecured secured part. And if I talk about the geography they are working in mainly Maharashtra. They are mainly Maharashtra, Delhi, Gujarat. That is the part they are working on. And Tamil Nadu also, 13% of AUM comes from Tamil Nadu, 24% from Maharashtra, Delhi is 15%, Gujarat is 10%. So mainly the western and northern and southern, they are not really present in the eastern part of India. So they are mainly targeting the western, and then it is something in northern part of India in Delhi, UP, and then the southern part of India is Tamil Nadu. That is the geographical presence. And if we talk about the average ticket size, the secured business loan is around 84 lakhs, the unsecured business loan is around 19 lakhs, and their new business vertical of emerging market lab is around 16 lakhs. So if I talk about the emerging market loans, it is around the 22% of book, and they are planning to ramp up this portion of the book to 30%, 33%, 35%. If we see 1 year back, it was around 13%, and now it is 22%, and it will be over 30% in 1 year maybe, if I am not wrong. That is the lab, emerging market lab. If I talk about details in it, see, emerging market lab is they are mainly focused on the underserved people who are not new to credit, but they are underserved by the NBFC, by the bank. Mainly they are present in tier 2, tier 3 cities, tier 5 cities. Mainly the customers are with the turnover of 3 crore. So they are mainly targeting the tier 5, tier 4 city who are the underserved in the past. So that is the target. And if we see the emerging market loan portfolio, it is the one of the highest ROI ROI product in the Ugro Capital's book. It is 19% of ROI. It is generating about 19% of ROI. If we talk about the secured business loan, unsecured business loan, that is about 16%, 14% around. So they are mainly targeting to ramp up the emerging market lab. They are, and if we talk about the AUM and disbursement of Q4 FY25, AUM is around 12,000 rupees, 12,000 crore, and AUM grown by 32%. So if we see, their AUM is growing at a decent pace, and then if we talk about the disbursement, this is also grown by 56%. So their AUM growth and disbursement growth is good enough. And then if I say the GNPA number and the credit cost, GNPA number is 2.3%, which is 30 BPS increase year on year. And if we talk about the credit cost also, that is also up quarter on quarter to 1.9%, an increase of 30 BPS. So if we talk about the credit cost and GNPA guidance in the past and in this quarter, then we will see that management is guiding us for a higher credit cost and higher GNP. But if we see the asset mix and all, it is not like it is one-sided. Okay, if we deep dive into the guidance, then if I am not wrong, what I understand is that they are trying to grow their emerging market lab, which is giving them more yield, and with more yield there is a extra risk coming to the business. So more risk means what? More risk means more yield. So if I am not wrong, as the emerging market lab is increasing, the allocation of emerging market lab is increasing, the risks of the portfolio is also increasing. So that is why I think the management is guiding us for the higher credit cost and higher GNP. If we see emerging market secured loan, guidance in emerging market secured loan, they are expecting disbursement to increase significantly, and they are also expecting the GNP to go to 3.7 to 4% from today's 2.6%. So that is the point is there, that if a company, if a lender is seeing delinquencies in some portfolio, what they do first? They cut down the disbursement. But here what is going on? The disbursement is going up, and also the GNP number is also going up, and they are expecting to more GNP number. So that is the point, that I think the management is expecting that as they are getting more yield and the customer profile is kind of tier 5, tier 4 cities, small cities, there will be more delinquencies or more defaults. So I think that is why management for a long time they are talking about credit cost increase in their book. So that is my understanding. I am not as a shareholder of Ugro, I am not recommend you to buy Ugro, but what I understand is that as their business, as their risk profile is changing, as their yield is changing, so there have to be the GNP number and credit cost have to increase, because you can't compare housing finance loan to a microfinance. Microfinance is have more yield and have more GNP number, more delinquencies, and housing finance have lesser risks, lesser yield, so as well as the lesser GNPA, lesser credit cost and all. So that is the point. I think with Ugro. So that is the thing we have to track, that where the credit cost number, where the GNPA number goes in the future. So that is the point with the emerging market lab. And the emerging market lab is secured product because it is loan against property. It is secured by some residential house or some commercial house or anything. So that is emerging market lab. And if we talk about unsecured business loan, they are talking about lesser disbursement of 25 to 30%, because they are targeting to increase the secured part of their business. That is why they are lowering their disbursement in unsecured business loan. Yeah, out of 30, it is around I think 26% of the portfolio. And if we see the portfolio of unsecured business loan is secured by central guarantee scheme. Around 41% of the unsecured business loan is secured by the central guarantee scheme. So that is the point with unsecured business loan. And secured business loan, they are looking to ramp up around 15 to 20% in near future only. And it is the segment wise strategy. So that's all. And if we talk about the portfolio yield, yeah, one thing is with portfolio yield is that it is at 17.3%, a decrease quarter on quarter, decrease year on year. So that is also a point, that how a portfolio yield is decreasing, because if we see the higher yielding assets like embedded finance yield is around 26%. If we talk about emerging market lab, it is around 19% of yield. If I am not wrong, it is 19% of ROI. So I am little bit confused that how the portfolio yield is lowered in this quarter. Before this quarter, portfolio yield was going up, but in this quarter it is 17.3%, decrease of 40 bps in quarter on quarter and 90 bps in year on year. So that is the point. We have to track the business. See, the business is in unmature stage. The business will mature time to time, and we have to track the business. It is not 100%, it is not right, not going 100% in the right direction, but we have to track it. That is the main thing. And if we talk about the revenue growth, it is around 25% of growth year on year, and the profit growth also 22% of profit growth year on year. So there is no operating leverage, And if we talk about the ROE number is 8.9%, increase of 50 bps and 50 bps quarter on quarter. Okay, so that is ROA number, and ROA number is around, if I am not wrong, it is 2.5% of range, and they are targeting to 4% ROA number in next 1.5 years. I mean Q4 of FY26 to Q2 of FY27. If we see their ROE of 4% get delayed by few quarters. They are maybe delayed around 3-4 quarters. So that is another point with Ugro, that they have not achieved their target. If we see there is some problem in MSME lending, there is some problem in MFI lending, or mainly MFI lending. And if we see MFI and MSME is like brothers, so if there is some problem in MFI, there have to be some problem in MSME also. And if we see other company like SBFC, other 5-star business finance, they are also not in a good position. They are also losing their position. The GNP number is going up for them also. The collection efficiency, if we see in SBFC finance, in 5-star finance, 5-star finance, then that is the point that why Ugro also could not achieve the number of 4% earlier, but they are saying that they will achieve it in 1 to 1.5 years. So that is the point with ROA. And if we talk about the leverage, they are comfortable with a leverage of 5x, and now it is 3.5x. So there is a good headroom for leverage. So we have to track the business, that where the business is going. And if we talk about the management, talking about the Tamil Nadu collection bill kind of thing, so as Ugro have 13% of their portfolio in Tamil Nadu, the management said that the bill is not for NBFCs, that is for money lenders who are the local money lenders, who are not regulated. Okay, so that is Tamil Nadu bill, and it will not affect them. It will not affect the NBFCs. It will only affect the money lenders, the local money lenders. Those who charge borrowers 10% for month and something like that. I think it is for them. It is not for the NBFC, and it will not affect Ugro's any business. So that is the point. There is nothing much to say about the business more. If we talk about the valuation and all, if we talk about the PB ratio, it is trading at a less than 1 PB ratio. So I think what I am doing is just tracking the business. I do not put any money in it. That is the main thing. I have to be clear. The business is going in a kind of right direction, but we have to see, because we do not know how the asset mix change will affect the company. If it affect the company in a good way, in a way that the portfolio yield and the spread, the NIMs and all is going up, then it is okay. But if I see the numbers, I am not too disappointed, but yeah, there is the number is not satisfying. uh, so just I have to say I will track the company, and in future if the company uh, bring out better result, then absolutely it is a not a bad company to invest. But I think for now it is not. We have to track the company, that is the main thing with Ugro. So that's it for the video. Thank you.